Hi, I'm Tim Whitmire with First Integrity Mortgage, and the topic of this video is reverse mortgages. And I've been having so many discussions about reverse mortgages with our in-house reverse mortgage specialist, and I've also been talking to a lot of financial advisors to get their opinions on it. And something that I'm very aware of with the reverse mortgages are kind of the negative connotation or even the stigma about them. But quite honestly, if used appropriately, it is a very, very, very powerful product that I believe in. And something about reverse mortgages is that I feel like they have the stigma because so often they can be used as a kind of a bailout kind of mortgage. And there's definitely a use for reverse mortgages for a bailout, but that's not really what I want to talk about today. What I'm looking to talk about today is how a reverse mortgage can be used to supplement your retirement and also used as a part of your retirement planning. And so something that was brought to my attention, which I'm very aware of for all mortgages, but which is especially relevant with the reverse mortgage, is that when you withdraw funds from your house or use your home equity, it's tax-free. And so your house, in essence, is a tax-free asset. And that's hugely important because retirees, when you're withdrawing funds that you saved your entire life, depending on what you're withdrawing from, many times IRAs, as long as it's not a Roth IRA, there are 401ks, whatever other accounts that you have, when you make withdrawals, you're taxed on it as income. But if you withdraw equity from your house, you are not. And that's a significant opportunity for seniors. For a reverse mortgage, you have to be 62 years or older, and you must have a significant amount of equity in your home. And so whether you use a reverse mortgage to pay off an existing mortgage, if you go that route, you can eliminate your mortgage payment. Or if you own your home free and clear, you could set up a line of credit, or you could set it up so that you're receiving monthly installments. Either way, anything that you withdraw or use from your reverse mortgage, you're not paying tax on. And so, but before we get into more of those details, I know it runs contradictory to the way a lot of people think. You spend your entire life trying to pay your mortgage off. And it's such a huge accomplishment when you do pay a mortgage off. And so to kind of reverse the thinking a little bit, it's like, okay, I've been working my whole life to pay this mortgage off, and now we're talking about possibly using that equity and adding a mortgage onto it. Sounds a little counterintuitive. But the way I'm looking or asking you to look at it today is view your house as an asset. Okay. So on one hand, you have your 401k or IRA, or maybe just stocks in general. And there potentially could be assets that are tax-free, but many times you're paying tax. So you have this asset that you're taxed on, and then your house, you have this tax-free asset. And reverse mortgages, there are significant upfront fees, and I'm super, super transparent about that. So there are additional upfront fees, but if you're looking at it, if you withdraw, I don't know, $50,000, $100,000, $200,000 from a taxable account, you're paying a significant amount of taxes. And maybe not in all, but many cases, the fees that you have on a reverse mortgage can be significantly less than what the taxes would be if you drew the same amount from a taxable account. And so, and that's the whole point of giving a reverse mortgage consideration. I know a common fear is like, okay, I have this house and I want to pass it on to my children. And that's, it's something that as a child, I'm not worried one bit about inheriting anything from my parents, But as a father myself, it does feel really good to think of being able to give something to my children when I pass away or go away. So I understand both sides of that. But the thought I have there is that if you're withdrawing an asset, whether it's an investment or whether you're drawing from your house, either way, you are withdrawing from an asset. So whether you're passing on your house or you're passing on the asset that you didn't use because you used your house, either way, you still have an opportunity to pass something on to your heirs, or if that's even a goal of yours. So that's just something that I'm not even suggesting that it's something you ought to do, but I do strongly believe it's something that should be considered. And if you were to reach out to me, I can get your very specific information and put together a scenario. And at that point, I encourage you to take that scenario and talk to your financial advisor. And I am absolutely more than happy to talk to your financial advisor as well, either with you or separately. And without their blessing, I don't even want to do the mortgage for you. And I only want to do it for you if it financially makes sense. And so many times it does. And so finally, the last point I want to make on this is that it's something that's super important. It's a non-recourse loan. So as long as you continue to occupy the home, it never has to be repaid. You're never making mortgage payments. And so in fact, realistically, the way it works, let's say initially you're borrowing $200,000. And there's still being interest charged, but you're not paying it monthly. It actually just gets added to your balance. So each month you owe a little bit more on your house. Okay. And so then the question is, okay, if I owe more each month, what if I live a very long time and ultimately I start owing more than the home is worth? And if that's the case, great. You're never going to have to pay that back as long as you occupy the home. And so when you no longer occupy the home, what happens is either, and many times you'll still have a substantial amount of equity in your home, and your heirs have 6 months to do something with it. So they can either refinance the house, buy the house, or sell the home, and they still get to enjoy whatever remaining equity that there is. But in the case that you actually owe more than the home is worth, the heirs have an opportunity, if they choose, to buy the home for 95% of the appraised value. And anything that's owed beyond that is forgiven from the bank. So no one's ever going to have to owe any money beyond what the value of the home is. And that's, I believe, a super important fact that needs to be known about this program. So lots of pros to it. There can also be cons to it. And I'm very much an open book. And I just wanted to put the product in your minds and have that discussion. If you're a senior and you're interested in this product, or if you have a parent that could benefit from this product, or a friend, I would love the introduction. And there's never any pressure whatsoever. It's just informational. And I just feel like there's a huge opportunity for utilization of this program. At the moment, I mean, home values, people are sitting on a record amount of equity. And so it's, I feel like maybe a greater opportunity than there has been in a very long time for this particular program. So I'm Tim Whitmire, First Integrity Mortgage, 314-402-8184. Thank you.